Good evening and welcome to this week's special presentation entitled A Personal Guide to Smart Investing. My name is Glenn Tompkins, Senior Stock Market Strategist for VectorVest, and it's my pleasure to bring your presentation this evening. Now, the purpose of this video is twofold. Everyone invests differently, so this will be a personal guide depending on how you invest in the market. And the second part of it is for smart investing. You need to know where you are as far as the type of investor you are, and then to use the tools within VectorVest software to know how to best place yourself in the best positions to accommodate your personal investing style. So this is going to be a series that we're going to start for the next few weeks, and I'm going to start off with the aggressive approach. But before we get there, let's then start to dive into the type of investor you really are. We have four main types of investors, and over the next few weeks, we're going to cover how you know where you stand. This week, we're going to start with aggressive, then we're going to go to prudent and conservative and speculative, but we're going to cover every gambit of type of investor you are. Now, when we do this, we're going to start off with a clean sheet. In order to know the type of investor you are, you have to understand your tolerance of risk and what you're looking for as far as reward. Risk to reward plays a huge role in understanding the type of investor you are. Do you want to be more risky or less risky? Well, then that's going to help to determine the type of investor you are. Willing to assume higher risk or lower risk? And then on the reward side, do you want low reward or high reward? Now, as soon as you look at this, you say, well, who wants low reward? Well, there are applications where that'll come into place depending on, again, your personal style of investing in the market. So now that we've set the groundwork of understanding where your low risk, low reward, high reward, now let's start to put this together. For people who are looking for low risk, see where that falls? Low risk, but on the reward side, high reward. Well, these are fairly safe stocks with upside potential. Whew, that sounds great. Well, if that's the case, you're more of a prudent investor. Low risk, high reward. Well, let's move on. How about higher risk and high reward? Ooh, that sounds good for many of you, but you will assume more risk. If that's the case, you're looking for more volatile stocks that have upside potential, and that makes you more of an aggressive person. And that, no, not aggressive person, but an aggressive investor. I don't want nobody to go out there and be aggressive, right? So aggressive investor, more volatile stocks with upside potential, and that's where we're going to concentrate tonight. But I need to set the groundwork again for all of the future presentations in regards to this so that you get a better understanding of possibly where you fall. Now, low risk, low reward. There's the low reward. Where does this come in? Well, this is we're going to talk about it in a second, but these are people who are looking for stable stocks that pay dividends. So I'm not looking for blockbuster running up stocks. I'm looking for steady move in a stock, and they pay dividends that gives me some of that passive income. So those people are considered to be conservative. Low risk, low reward. The low reward shouldn't scare you away. These are stocks that are going up steadily over time that do pay dividends. And the last but not least is the speculative trader. High risk, low reward. There's the second time where we get low reward. These people are looking for risky stocks, but they're looking for the lottery ticket upside. Now, I know we all speculate on some stocks. There's a lot of stocks out there that we will speculate on, but these are really risky stocks that really need to move. And I liken this to, I'm a Yankee fan, of course, Reggie Jackson. Reggie Jackson hit a lot of home runs. What else did he do? He struck out a lot. That's more of the speculative play. Now, if I'm looking to manage my portfolio, well, where should I be? Especially longer term, I should have more money in the conservative. Then I would go to prudent. Then I would go to having some aggressive, and speculative would be a very small portion of my portfolio. But this is where the rubber meets the road. Knowing this is the personal side, knowing where you fit is so important. Now, let's talk about the smart investing side of it, because VectorVest has tools within the system to help you to determine where you fit here, or now that you know where you are, how do you find the stocks that best fit your personal investment style? So the indicators we're going to look at. We're going to look at relative value. Relative value is cast on a scale between 0 and 2. It looks at a stock's long-term price appreciation potential, its upside over the next 1 to 3 years. Should it outperform a AAA corporate bond? Above 1 is favorable, and it should outperform that AAA corporate bond over the next 1 to 3 years. So prudent investors, well, we want to find stocks that have an RV above 1. Aggressive investors, we also want to find stocks that have an RV above 1. Because we're aggressive, we're looking for that upside push. We're looking for the ability to make that money. Now, when I look at the conservative and speculative, I want RV below 1. I'm okay with that, but the stock's got to have good safety. We're going to come to that in a second. I'm okay with RV being above 1, especially if these stocks pay a dividend that gives me that passive income. Speculative, RV below 1 as well, because we're looking for the home run hits. Now let's look at another indicator in VectorVest called relative safety. The stock's ability to meet or exceed its earnings expectations quarter over quarter, year over year. Notice that on the aggressive side, we're looking for relative safety below 1. We're willing to give up some safety to hopefully get the high gains that outperform the market. Notice that on the speculative, RV below 1 and RS above 1. By the way, RV and RS are our fundamental indicators, which means that, or it shows that these are great indicators to help you to adapt or find the right stocks according to your investment style. We like to say that the speculative investor throws caution to the wind. It's all about the speculation. But when we look at prudent and conservative, we want relative safety above 1. Notice that the prudent box, we're looking for good upside potential with good safety. We call this the best of both worlds. On the conservative side, because we're looking for stocks that have a relative value below 1, safety is so important. I want safe stocks that are going to be a high probability to meet or exceed earnings expectations quarter over quarter or year over year. So now I've broken down the personal side of the presentation of knowing where you fall in these 4 boxes. And then the smart investing side of it is finding the stocks that fit that investment style. Now, before we go further, I need everyone in here to build a watch list of the stocks that you currently own. Now, many of you have already done that. But for the newer people who are just coming on board, this is going to prove to be a vital point to help you to understand where you really sit in these boxes to understand what kind of stocks you need to find. So, again, everybody needs to build a watch list of your stocks and then look at the average on the bottom and see where you fall. Are your stocks with a relative value and relative safety above 1? Now you know you truly are a prudent investor. Are your stocks with a relative value above 1 with relative safety below 1? Wow, you're aggressive. Some of you think you're super aggressive, but you may not be based on the stocks that are in that watch list, which is why it's so important that everyone takes a moment after this presentation to build a watch list of the stocks that you currently own. All right, now that we know, hopefully, where you sit, I like to call myself progressive, prudently aggressive. Now, I know that that's not in here as one of the boxes, but you'll find from a personal perspective, remember, the personal perspective, that you will, gravitate to a combination of the two. Well, that's another story for another time. Let's get into the software. Now that we've set the groundwork, let's go into software. Let's say, and again, I'm concentrating on the aggressive side. All right, so I'm looking for stocks with a relative value above 1, but with a relative safety below 1 because I'm willing to take on the risk. First thing I want to do is I want to go to the Unisearch tool. Within the Unisearch tool, we'll make it simple. There's a lot of ways to find aggressive stocks, but I'm simply going to go to the folder that says Search is Aggressive, and here they are. There's not a lot of them, but you know something? If they work, you don't need a lot of them. And again, there's a lot of different ways to find aggressive stocks, but I'm going to start with just plain Jane, simple application of just looking at the aggressive folder in the system. Now, what would we use from a market timing perspective to get into aggressive stocks? You know, we've got several different market timing calls. What would be the best for the aggressive stocks? I'll wait. Oh, this is not live. So I'm just joking with you. The more aggressive person will gravitate to the more aggressive timing signal. I'm going to go to the market timing graph. I'm going to bring up a market timing graph. And from here, I want to use one of the fastest indicators we have, if not the fastest, called the primary wave. I'm going to go down to the bottom, click on primary wave. And now I want to still keep this simple, super simple. Let's look at the most recent primary wave up to down. We're going to put this on a 1 month graph, and here we go. Primary wave up. Now, primary wave looks at the week-over-week movement of the VectorVest composite. When we get an up call, the market's moved higher on a week-over-week basis. That shows me some trend, all right? That the market's moved higher, primary wave is up. Let's go look at that date, which was 5/2 of 2024. But we did get a market down call or a primary wave down call on 5/22 of 2024, about 20 days. That makes sense in an aggressive type of scenario, fastest moving indicator. It may not give you a long-term call, but that's not what I'm looking for when I'm trying to be a little bit more aggressive, right? So simple, most recent call, and we'll go from there. Let's go back to the Unisearch tool. So what was my dates? Let's go to aggressive rebounders, all right? What am I looking for? Relative safety less than 1. Relative value greater than 1. Bam! That fits right into what I want, along with all of the other criteria to find these stocks, and it's sorted by VST, which is our master indicator. So I want to run this as of 5/2/2024, when we got the primary wave up call. I'll run it as of that date. Here's the stocks that met the criteria. Now remember, aggressive stocks. A lot of these stocks you do know, and they probably did move up very well. I am going to do a quick test from that date of the top 10. 6.89%. All right. In this, we had 7 winners. Let's go change this. We had 7 winners. Nice move. And this is what aggressive stocks do. In a short amount of time, can go up double digits. 3 of the stocks, and within that 20-day time period, went up double digits. That's what you're looking for. But you're going to assume some risk. One stock did go down double digits, and that's where stops come into place. But we're not even talking about stops right now. We're strictly talking about what they did. All right. Now, that's 6.88%. That's up until today. When did we get the primary wave down? On 5/22. So I'm going to change the end date to 5/22, and let's go do another test. Click on OK. We will run the test again. Wow, 7.3% outperformed the market. Still 7 stocks went up, 3 stocks went down. But now, because we use market timing, we didn't take that double-digit hit on YRD. And number 2, we picked up a 4th stock that went up double digits. That's what an aggressive trader is looking for. Nicely outperformed the market in a short amount of time. Let's go to the next search. Aggressive small fry. Do the same thing. Let's quick test the top 10. Up into 5/22, 8.18%. Good, googly muggly. And 1 stock went down double digits, but 4 stocks went up double digits. This, again, is what the aggressive trader is all about. Now, does this always work? Well, let's go find out. 2.77% on aggressive stocks. Still 7 winners, 3 losers, but not nearly as much as what the spiders did. So we didn't outperform the spiders. But again, this is part of, being a little bit more aggressive. You're going to assume more risk. That'll happen. But VITL up 40%, TPC up 20%, Alarm up 18%. Some of these stocks we've talked about on our YouTube channel. If you're not part of our YouTube community, please stay on top. We'll get you some of these stocks before they move. Let's go to best stocks below 20. Quick test the top 10. 4.8, we kept up with the market on this search, and we had more winners. We had 8 winners, 2 losers, but wow, VTSI killed us, 40%. But again, you're going to assume that risk. So what I've done in regards to this, I've got a spreadsheet of all of the searches in the aggressive folder and what they did. How about best stocks below 15 did the best? 9.28%, 9 winners, 1 loser. Now, I'm sure that a lot of you are going to say, well, you're only just looking at one time period. Absolutely. If you want to do some back testing, and I know there's a lot of people out there who are going to take this and they're going to back test it and they're going to try to beat it up. It is what it is. This is an aggressive way of playing the market and making money in the stock market. But you've got to know that that's the type of investor you are. You may think that you're a more aggressive trader, but you may not be able to take some of those losses that you saw in some of those quick tests. All right. And maybe you're looking for better gains, maybe not as high, but more steady. Maybe you look at prudent. We'll talk about the prudent, the conservative, and the speculative investors in the coming weeks. But this week was all about getting you started with just the aggressive searches. So, folks, hopefully this opened up some doors, turned on some lights about the type of investor you really are from a personal perspective, and then knowing how to make the smart investments by using the VectorVest tool based on relative value and relative safety to find the right stocks that fit your investment style. Folks, you put that all together, you've got a recipe for consistently making money and not worrying about what the other people are doing. It's all about you. At that point, the personal side, because everybody trades differently, it's all about you. Cater it to you and use the right indicators, relative value and relative safety, to find the right stocks from the smart investing. Folks, this video is over. And until the next time, see ya.